In just the last few months, Supermicro stock has lost over 50% of its value. This is SMCI stock. I previously did a video on Supermicro, effectively warning investors, the valuation just didn't make sense, wasn't super compelling. I didn't see, continued significant upside. I thought the risk reward just wasn't that great. Adding insult to injury, you have a short report from Hindenburg Research talking about fresh evidence of accounting manipulation, sibling self-dealing, and sanctions evasion at this AI high flyer. Obviously, most investors don't like to see that. I actually don't mind it. And I previously did a video on Fairfax, one of my top holdings. So in full disclosure, I do own a position in Fairfax Financial, when a short seller report came out, and I sort of walked through, what are the main claims of this short seller's report? And the reason why, and by the way, if this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. If you enjoy educational investment videos, please hit that, thumbs up, hit that subscribe button. The reason why I like short seller reports is because you get the opposite perspective. And oftentimes, this is the best that they can do to bring down the company. This is the best. This is their shot. This is their shot to bring down the company. So, this is your chance to review, okay, if this is as bad as it gets, do I still want to own it? Do I want to double down? And that's the reason why I previously did that video on Fairfax. And then later in this video, I'm going to talk about the number one rule for spotting accounting issues, what it all boils down to, the number one rule for short sellers. But let's go into some of the claims from this report, because sometimes the short sellers report, you say, hey, it doesn't really have merit, or, the smoking gun, it really isn't that bad of an issue. Let's dive into some of the top claims from Hindenburg, because they do a good job of just showing, look, here are all the bullets. If you don't want to read the whole report, I always prefer, let's get it up front. What are the key problems? And so they talk about, look, back in 2020, so you have to go back a few years, they were charged by the SEC for widespread accounting violations. That's obviously not good. And they had to pay nearly $20 million. So that alone, the SEC, if the SEC goes after you and you have to pay, $17+ million, you did something where you crossed the line. That is important to recognize. And they talked about how they spoke with a former salesperson, and all of the people that were around during that time that were let go because of this behavior, they've actually been brought back. So that's obviously not good as well. The report also talked about how, look, there was also CFO turnover, where the CFO who was, running the financials previously, he left the company in January 2018. So either way, you're going back a few years, but he was charged separately by the SEC with accounting violations. And in 2023, so getting closer to today, he was hired by a key related party owned by Supermicro CEO brother. Okay, so that's sort of an orange flag, the being hired by a related key party. I wouldn't quite put that as the red flag. Obviously, look, this stuff did happen in the past in terms of, the CFO being charged, by the SEC. And then also they brought on a new CFO who was later resigned in 2021. So no one likes to see CFO turnover. That's definitely a red flag for investors. So automatically this raises the question, as someone who's researching SMCI to see if this is potentially a bargain, I want to size up, what's been the CFO standing now. So I go to AI Ticker Chat. I go, how long has the current CFO been with the company? This is chat feature, which is now completely free to use. You can check that out at AI Ticker Chat. See the link below. And the answer is that, look, you have this guy, David Wygand, who's the CFO, and he's been with the company since 2021. So I'd argue the turnover has quieted down. That's what I like to see. His prior experiences include being with HP, and he's also a compliance officer. So if there are big issues, he would definitely get tagged with it, because he's been with the company for several years now. And then looking at Hindenburg's report, he also calls out problems of self-dealing, where there's these related parties that have been paid nearly $1 billion over the last few years, and these related parties owned by the CEO and his wife and his brothers, CompuWare and AbleCom. And it is concerning that these related parties got around $1 billion, and these related parties effectively, based on their research, effectively their entire business is exporting products to Supermicro. So that is a red flag. Hey, you have this whole separate business that's getting, a sizable amount of money to provide, services, provide parts equipment, supplies, to them. So this, this makes you think, okay, they're taking, money off the top. And there's also, this one is another red flag about how the younger brother of Supermicro's CEO owns two Taiwan-based entities that make server components, and that these relationships were not disclosed. So it's one thing to say, hey, we've disclosed these relationships with Ablecom and CompuWare, but it's another to have relationships that you haven't even disclosed. So that, I'd want some confirmation whether or not that's the case. They also do sort of make some extrapolations that, look, they might be losing key customers where NVIDIA is one of their key partners, and the CEO of NVIDIA recently said nobody is better at building end-to-end systems of very large scale for the enterprise than Dell. So that's obviously one of their key competitors. Report also talks about how CoreWeave, previously one of their largest customers, announced a deal with Dell potentially worth over $1 billion. So, these are the arguments that I wouldn't say are a smoking gun, but would cause investors to have some pause here to say, okay, what's going on? Also, some reports by Elon Musk suggesting, look, that Dell now has won some major deals for Tesla and Musk's xAI, his major AI bet, and that they've lost business, or they've have, their relationships with some of these major players have been a train wreck of sorts, talking about AWS and DigitalOcean. Personally, I view these sorts of claims as worth noting. I wouldn't necessarily put it in the red flag pile, because some of it can be extrapolated, some of it can be frankly wrong. If you have a market like what's going on with AI, where it's explosive growth, is it possible that multiple players are winning at the same time? Because at least based on their financials, their growth, they're effectively expecting acceleration of their growth. They're expecting, they've delivered, based on their reporting, if you can believe it, 100 to 200% growth, which is just incredible growth. So that suggests multiple players, are winning in the space. But this is, the story just sort of keeps getting worse, because right after this short report came out, I believe it was right after, you have, Supermicro files that, oh yeah, by the way, we're going to have to delay filing the 10K. So that might be a problem. We have to review our internal controls for financial reporting. Not sure if there's going to be any problems, but I do respect the fact that shortly afterwards, so you're talking about this month, today, it looks like, you have the CEO, Charles Liang, putting out a note saying, look, it's important to hear straight from the horse's mouth, straight from the boss, that, look, it's not good that there was this delay. We're going to be working on it. That said, look, we're still the baller. We're still 75% of the direct liquid cooling market for air servers, or at least that's what we think. We're the dominant AI, solution for this very specific market. So we think we're winning, and we think that, the letter, sometimes you do get CEOs say like, this, is a fraudulent report, and then it turns into a character smearing attack. And once you cross that line of character smearing, then I start thinking, okay, this isn't, that's not what I'm interested in. I'm interested in a rebuke, showing point by point why the short thesis was wrong. When you go after character attack, either way, unless it can be like really proven, like here's something that you did clearly fraudulent, then, seeing that they took sort of the clean approach in responding to the short report, saying, hey, we think this short report is a misrepresentation, and they talked about in the second page of this notice, it does make me think, this is a respectable way of responding to it. It wasn't the like, we're going to go after you. And so what are my thoughts on this short report? What are my thoughts on Supermicro? Because truthfully, I'm not an expert on Supermicro. This is just sort of a quick look. As always, this is not financial advice. Also, quick plug. Recently, Robin, a premium member of Unrivaled Investing, commented that, this is a quote, "I am an extremely happy customer of Unrivaled. The information services you provide to me are invaluable." This follows another subscriber posting on how, this is another direct quote, "I'm currently ahead of my investing goals to retire at age 45 thanks to Unrivaled. By the way, I will be raising the prices for the premium tier this fall, so now's the time to lock in the favorable rates." So the number one rule for short sellers, and this is personally something that I got years ago from reading this book called Creative Cash Flow Reporting. If you just want to ignore this, you don't want to read it yourself, the number one rule is look for a discrepancy between what management says is the net income of the business, the profitability of the business, and the free cash flow. Because ultimately, cash is king. It's very, very hard to manipulate cash because the accountants and the the auditors, they go, okay, show me the accounting statement. They can check in with the bank. They see the cash, and therefore, the lying on the cash flow statement's much, much harder. That's the key conclusion. Most of the fraud that you will see involves the income statement and the balance sheet, less so going through the cash flow statement. Usually the red flags start perking up on the cash flow statement and things might be mislabeled, but you see some sort of issue. So let's do a quick look at their financials, and you see net income has absolutely exploded. This is the reason why the stock had, prior to the last 6 months, had done extremely well, as people are looking at this AI growth stock. But the free cash flow picture has been dismal, and you can see that it has not kept up at all. Seeing that in 2023, the free cash flow picture was around 600 million, 500 million, and going back, you could see that did line up with 2023. But 2024, you're talking about a huge discrepancy, and going back the prior years, it just really hasn't. It's been quite. There's been a huge difference. Now, that isn't alone a smoking gun, but it is something to suggest like, hey, you need to dig further if you're going to believe in this company. Because in this case, they have a huge investment in inventories and receivables. And so that turns into a question of like, okay, is their actual revenue going out, or is there actual, customer cash coming in from their customers, or are they saying, hey, this was revenue and it wasn't actually? Now, so that alone, I would say puts this, in a situation where this is now the too hard pile for me personally. I personally prefer to have situations where, like if you have a situation where you have free cash flow significantly outpacing net income, it's unlikely that there's some sort of fraud. It's just extremely unlikely because like there's more cash coming in than we know what to do with. So cash is king. That's the key metric to always go back to, even if there is short claims. And so you want to track, okay, is the free cash flow improving like management might suggest, or does it tie reasonably to net income over time? And I would say here it is. This is sort of a yellow flag. Personally, based on these data points alone, particularly the self-dealing and the sort of the disconnect between net income and free cash flow, it's in the too hard pile for me. That said, not for everybody. Some people might say, hey, this is still a great growth story. We're in the early innings. This is just, you're talking about a multi-trillion-dollar opportunity where, businesses are going to be investing in it. So I can understand that. And SMCI does have some attributes that I do like, such as alignment. This is one of the key sub features within Scorecard, within AI Ticker Chat. So I just went to Scorecard. I said, okay, give me a qualitative assessment of this business. And alignment's one of the features. It's saying, look, it gets a 9 out of 10 on alignment. It's saying it's really great. You have significant insider ownership, nearly 20% of the company. And then, by the way, the CEO's salary total income was $1 in 2023. So those generally, this is, it's hard for investors. And this is what makes investing in my mind so much fun, is that rarely do you have just a super clean story where you're like, free cash flow and net income are great. And, you have this instance where like you have these red flags, clear concerns, potential insider self-dealing. And then you have like, wait a second, but you own a significant part of the company. You have, that's not the behavior you would see, where you see the CEO say, oh, I'm only going to get paid $1 a year. That's typically not the type of behavior you'd see from someone that goes, hey, I'm also going to be self-dealing and effectively take $1 billion for my family. So, it's very tricky signaling here. So I can understand the bull thesis might say, look, I can trust them given the amount of skin in the game, given the payout structure. And the quantitative assessment, this is using the predict feature at AI Ticker Chat, is saying, look, if they continue with strong growth in the years ahead, if they continue to have significant margin expansion and continued multiple expansion, then you could have, a huge upside from here. Personally, I think that this is too bullish. I think these margin expansions a little too much for a business that sort of seems like the most of the value should actually go to NVIDIA, the actual server or the actual chip designer. So seeing it go to 15% margins, I think AI is over extrapolating their recent trends. So I would tweak this lower. But it is interesting to see that, AI in this case is saying, hey, there could be significant upside, hundreds of percent upside, if the numbers can be trusted at the end of the day. Personally, I look at this a little too hard for me. If you're a mega bull on super micro, I hope it works out for you. The red flags that I've seen, that's enough to give me pause. And I'd just rather, look, every investor has a different journey. I would be totally fine waking up in 5 years from now and this has gone up hundreds of percent. I hope it works out for the investors. I hope it does, just because, it's not right for my own personal journey. And my personal journey says, hey, what are the things I'm going to do so I sleep well at night? And it does involve alignment. It does involve accounting where I go, okay, the free cash flow is actually there. So anywho, each investor needs to figure out what's right for them. For me, this is too hard, but I wish the bulls well. I hope it does really well in the years ahead. And I'm rooting for AI. I'm rooting for GPT next to be a breakthrough that can help humanity. So if you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning into Unrivaled Investing.